Um, I see on your list that none of them are the big incumbents like MasterCard or Visa. Why do you move elsewhere and not have them on your buy list?
Well, hey, great to be on the show again, Tyler. Like we've downgraded Visa earlier in the year, and our concern is more about the long-term cash to card expiration of the cash to card movement. And basically what it means is that 2/3 of the growth of Visa is being threatened because we've sort of reached post-COVID a cash to card kind of like point where there's not that much more to convert. Remember that cash to card drives 2/3 of growth. So, there's better place to play if you want payments than the networks. And I think that playing some of those companies that offer services, to restaurants or retail, those are the better places to
So when
play.
you say cash to card, you just mean the transition from people using cash to using their credit card instead.
Yeah, most people don't know that, but about 2/3 of the revenue growth for Visa historically, exactly 2/3, comes from basically people using more card in year one than they used in year zero. And what happened during COVID, we're now at like maybe 70-80% penetration of cash to card in the US, which means that like the runway for converting cash to card and generating that 9%, 10% growth over time is more, I would say, challenged or being put in question. That's a very important point that most people don't appreciate.
So take us through some of these payment companies that you do like, and you mentioned specifically that one of the edges they have is that they provide services to the merchant. I believe that's what you said, services to the merchant as well as convenience to the diner or the payer. And I'm notably curious that on your list is Robinhood, which I think of as a stock trading platform, not a payments platform.
Correct. And Robinhood is a stock trading platform. They're mostly on the stock side and on the trading, et cetera, consumers, P2P, et cetera. But the ones that are very important in the category that you're talking about, and I think that's a great point, there's Toast. We're neutral in Toast. The reason we are is because we are worried that the transition from online to in-person to pre-COVID level is going to shrink their take rate. So they benefited greatly from they make more money on online ordering versus in-person because of the credit debit mix. And when the credit debit mix goes back to pre-COVID levels, because they don't make much money on credit, make more money on debit, which is where the online ordering comes from, that's causing the shrinkage. However, they are doing a great job. They're upselling really well. They're growing GMV really well. They have like 60-something thousand locations. I think from all the names in payments that we cover, they're probably doing the best job in restaurants. That's followed by Clover, which is owned by Fiserv. Not that many people know Fiserv. It's a legacy player. Clover is a massive success in restaurants and retail. That's sort of a branded point of sale. And of course, you mentioned Square, which is a very important merchant acquirer. They're also a big share gainer, although I heard that in restaurants, they're not doing as well.